Hello. I would like to show you how to handle credit card payments inside Monarch Money. This is a very common question that I get, not only just how to categorize the credit card payments, but also how to budget for additional credit card payments. This will be most relevant when you are trying to pay off a credit card. You are carrying a balance, you've been carrying a balance, and you're trying to make progress towards paying off your credit cards in full. And it can kind of be complicated to set up in Monarch Money if you don't understand the basics and how to handle credit card payments inside a budgeting app. So I'm going to walk you through step by step how to enter everything into Monarch. But first, real quick, my name is Taylor. I'm a financial coach. I am helping families, couples, individuals, business owners create budgets, create cash flow systems so that they can pay off debt, save more money, feel less financial tension in their household, and feel more financially confident. I've been helping my clients get set up in Monarch Money. Monarch Money is my favorite budgeting app as of right now. I've been using YNAB Mint, Every Dollar, and spreadsheets with a lot of my clients as well, but I have really enjoyed Monarch and so have my clients. So I'm excited to show you the things I've been noticing, the questions I get from the households I work with, as well as what I've been doing for my own personal finances and how I've been using Monarch. So let's dive in. All right, so first off, there is a cash flow report here that is going to be kind of key as far as understanding how your credit card payments are affecting your cash flow. A budget is there to monitor and show you what your cash flow is. That is money coming into your control and money going out of your control. That is what a budget is. That's what a cash flow is. If any part of this is confusing as far as the cash flow report goes, I have a video on sinking funds that explains this in greater depth that I'd love for you to check out. But we're going to kind of skim through this part here. So first off, I want to point out how in this scenario, we have $4,200 of income, $3,900 in expenses. It's showing your savings rate, and all that jazz. Well, I'm going to show you what happens when we add a credit card payment in there. And so just as like a fun quiz question, like how do you feel like this is going to change when I enter in a credit card payment? And let's say the credit card payment is about $300. I'm going to put that into the transactions. I want you to think about what difference you're going to see in this cash flow report once I put that in. All right, let's get those entered. So I'm going to go into transactions. I'm going to add a transaction, and I'm just going to add the credit card payment. Now, when you make a credit card payment, it is 2 transactions. And if you have your accounts linked, you don't have to enter this in. Obviously, this is going to show up automatically. You don't need to know this part. But you should know that there will be 2 different transactions. One is your credit card payment going out. Oopsie, let me fix that. All right, so you have your money coming out of your joint checking account, let's say, to pay off your credit card. And then there's normally another transaction if you have your credit cards connected to Monarch with it's going to show the credit card that you paid off. And this is them receiving that payment. So there's 2 line items, one where the money went out of your checking account and one where the money went into your credit card to pay off. So you'll notice both of these are labeled as credit card payments because they are, that's what they are, right? And so if you look at your cash flow now, you'll notice that nothing changed. And if you got that right, awesome. If you didn't, go ahead and watch that other video that I talked about, the sinking funds. That will clear that up just a little bit. But to reiterate, a credit card payment was not money going out. The money that went out was the stuff that went on the credit card. So like the Peloton, Comcast, Verizon, all of these items were charged to the credit card and it left your sphere of control. It's someone else's money now. They can do what they want with it. Credit card payments are just moving money from one account to another, basically. And so what you don't want to do is label this as anything other than a credit card payment or transfer, this money that you paid off. Otherwise, you would be double counting. You'd be including all the transactions that went out as well as the credit card payment, which means your expenses would be closer to $600, not just the $300 that you spent here. Now, this isn't exactly what's going on the credit card. This is just purely for an example. Okay, so credit card payments are always that, but then you're probably like thinking, well, how do I know how much I can put towards a credit card? Like this is telling me I have savings now, but I don't because I put that money towards a credit card or, stuff like that. This is where it can get a little complicated, but just know that a budget is designed to give you a year's view. And so you don't want it to be double counting, even though you charge the credit card, let's say in July, and you're paying it off in December, the payments, those extra payments should not be additional expenses to you. Otherwise, you would have paid the $300 for the the purchase in July as well as in November. And then in your yearly number, you would see the $600 total rather than just the $300. So we don't want to double count. So that's how you handle credit card payments. If you're paying off your credit card in full every month, that's really all you have to do. That's where you can stop. Just know that that's how you treat it. If you're paying it in full every month, then you're probably, whatever came out of that month is being accounted for, because all of your expenses outgoing, as long as they are categorized correctly, are being accounted for. Now, one thing to know is that, like, if something is labeled as a transfer, that is also going to affect cash flow. So if I change, oh, that's a big one. Yeah, let's change this one. So if I change this one to a transfer, my HOA monthly dues, which is not a transfer, that went out to someone else. Sorry, I'll look at my cash flow report here. And we'll go back to monthly. You're going to see that we have that's a different month. There we go. $541 in savings. That affected the savings. Now that because I labeled that incorrectly as a transfer, it's showing I have savings. And so you need to make sure that all your outgoing expenses are labeled correctly. Otherwise, you will get incorrect information here. But we can just put that right back to where it was. And I kind of already forgot what it was. So then the question is, well, if it's not affecting cash flow, how do I account for it in my budget if credit card payments don't account for cash flow? Well, there is a place you can put them in, and it's not any of these categories. You do not want to put your credit card or additional credit card payments in any of these categories, because these are outflow categories. These are money that is leaving your sphere of control. They actually belong in goals. So let's go ahead and set that up real quick. We're going to go to goals. We're going to just get started here. We're going to click on the credit card one, and we will go to next. We want to pay off all the credit cards. That's our goal, okay? Let's see. And so it's going to load for us. All right, so it's going to be the total of all the balances. So you have to connect the credit cards that you're going to pay. They need to be added into Monarch. You need to add them into the software so that it can account for it. You're going to, in this demo account, there's only one credit card, so I'm going to click on this. But if you had more credit cards, all of them will show up here, and you're going to turn on all of them that you are working on trying to pay off the balance. So in this case, it's $11,000 on that credit card. All right, so this is the additional credit card payments. So if you are still using your credit card payments, this can get a little complicated, because if you're still putting on, let's say, $500 a month for like your Peloton and all the other stuff, right? You're still putting on $500 a month. If you only put $500 here, you are only going to be paying off what you put on. You're not going to be making a lot of progress towards your goal. In fact, it's going to show zero, and I'm going to show you how it's going to show zero, but it's going to show zero progress towards your goal. So this is actually, you need to take what you're putting on, generally speaking, as well as the additional credit card payments that you would like to make. Actually, I misspoke. You're actually really, I think, only going to put on what the additional payments you're going to make. So if you're trying to make a goal of, I'm going to put on 200 extra. So even though I'm using it, which, by the way, you shouldn't be using your card if you're trying to pay it off. It's just so much easier on the app. It's so much easier on you, and you're going to see progress a lot better. As soon as you're carrying a balance, stop using the card. The points are not worth it. You are not getting enough points to counteract the amount of interest that you are getting. And it's just also a huge pain in the butt, and it also adds to your daily balance. Just stop using the card if you're carrying a balance. But if you are still insist on using that card while you're carrying a balance, what you're going to do is only put the additional payments that you're trying to make. So my goal is going to be, I'm going to make $500 additional payments every month so I can start chipping away at this goal, right? So let's get that set up. All right, so now you see that you have your goal here, the credit card there, in these transactions. Now, what you're going to do is when you go into your budget at the very bottom, you're going to see, hey, now I have that $500 goal of putting extra money towards the budget. You're going to see the actual amount here. How this actual amount is being accounted for is very specific. So it only accounts for any cards that are connected to the goal. So in this example, remember we added that one credit card to this goal. That means that any transactions that came from these other accounts will never be able to be attached to the goal. And I'm going to show you what that means. So if I go to credit card payment, I'm going to click on that transaction. It gives me the option to connect it to a goal. The only way I can do this is if the joint account is connected to that goal, which we just did. So we can do it. That's why it's showing up here. If it says no goal, that means the account is not connected to the goal. Okay, so we're going to add that to the goal. I'm going to see what happens in our budget. Now we're going to scroll down. And now you can see we've made $300 of a payment towards that credit card. And our goal is $500. Now that's as simple as it is when you are working with credit card payments and you are not using the credit card anymore. If you are still trying to use a credit card, what you would need to do is you would also need to, I believe, add all of the transactions that you made to the goal as well. And there's an easy way to do this rather than going into each transaction. What you're going to do is go to your settings. Your settings are going to be behind my image in your video here, but we're going to go into your settings. We're going to go into rules. We're going to create a rule, and we're going to say if the account is my credit card account. Then if there's any transaction created from the credit card account, I'm going to link it to my goal, because if you're spending on that card, you're going against your goal. If you are adding payments to your card, it's going for your goal, and you want to see all progress towards your goal. So I'm going to click on this, and when I click on this, it will apply to 201 changes. That means there's 201 transactions in my credit card account that should be changed to link to this goal. So we're going to go ahead and give that a shot here. And I don't know if this will work in the demo account. I'm hoping it does. So let's find out. So now that you can see here, it's showing that I put $1,000 on this card at least, but I also made a $300. So about $1,300 I have put already on this card in December. So if I'm going to make an extra $500 payment, it's telling me that I need to put another $1,500 towards this card in order to not only pay off what I put on, so all the expenses that went on it this month that are actually on it, in addition to the extra payment I would need, it's telling you how much is remaining. So again, this is why it's so much easier to do this if you stop using the card. If you are currently working on paying off a credit card, this is going to be a little harder for you. Okay, so what I did was I went ahead and just tried to demo this. I did the extra $1,500 when I go into our budget. Both the credit card payment, the one that was received to the credit card, was connected to the goal. And now you can see we're just $4 off now. We've made 496 additional payments on that goal. And you look at the goal, you'll see here a breakdown of it. We made $1,800 contributions, the $1,500 plus $300 that we demoed in here, minus the $1,300 that we put on the card, that we charged the card this month. And that shows us our total progress towards this goal. And so to reiterate, like, it's really very helpful to not be using the card for this. But so what you're doing in your goal here is only putting the additional amount that you want to make, not what you're trying to pay off total. Because you'll notice I put $1,800 towards this goal, but I only did $500 extra. The rest of it was accounted for as you were spending the money. It was leaving and going to the merchant that needed those funds. And that's why it's also really important that you are keeping track of just what's left to budget, so you can account for this, that this is included in your budget. Otherwise, if you create a budget and there's no extra credit card payments, then you're not going to make a lot of progress towards your goals. And as a side note, if you weren't using your credit cards and you were just making minimum payments to pay it off, or minimum payments and additional extra payments, what you're going to do is the full balance. Whatever you are putting as far as minimum payments and extra payments, that needs to be in your budget line item. But that really, and so again, if you weren't using the card, then that makes sense. Those minimum payments are just payments towards the credit card that are going to get paid off. It's the extra payments that you're not putting on this month. And so again, like, just adding, if you are working on just minimum payments right now, you're just adding up all of the payments that you need for your credit cards, putting it in the budget if you have, and then you can add the dollars extra that is available to you in your budget. If you have questions, please leave them in the comments. I will make more videos if I get into questions on specific topics, or if I didn't explain anything well enough. Like, please let me know. I want to make more videos to help this be a little bit of an easier setup for you in Monarch Money. If you are just sick and tired of dealing with this and you don't want to handle it anymore and you want someone else to help you, I'm here for you. Let's book a call. Let's chat. I can help you get this all set up in Monarch Money, help you create a budget where you can be making extra payments towards that credit card debt if you have it. Or towards your savings. So I'd love to talk to you, but thank you so much. Please subscribe, and I'll see you soon.